Hello and welcome to this Monday's weekly morning market briefing. We've got lots to talk about, but firstly, Israel's forces do expand Gaza's ground operations in push to destroy Hamas, as well as that UK insurance brokers back the move to cut costs for leaseholders, and finally, Mike Pence suspends his 2024 presidential campaign pitch. We've got lots to talk about on the charts also, and lots happening on the economic calendar. We'll come to that near the end, so make sure you stay around to see that. But firstly, to talk about, of course, is Israel and its operations now in Gaza. And Israel has expanded its ground offensive into Gaza as Benjamin Netanyahu, the Prime Minister of Israel, said the country had launched a new phase of its long and hard war to destroy Hamas. Now, more troops had been sent into Israel, into Gaza overnight, and combat operations were continuing in the north of the Strip, and this is the north of the Gaza enclave, and this is primarily the Gaza city. This is where the Gaza city is situated within the enclave. It is in the north, and that is seemingly where they're looking to push in. Now, phone and internet connections were steadily restored in Gaza following the communication blackout, leaving residents without contact to the outside world. And we're also hearing now that Elon Musk is looking to possibly introduce Starlink's operations into Gaza to allow individuals within Gaza to remain in contact with the outside world. And obviously this is caused some very negative reactions from Israeli forces, and as well the Israeli government, obviously, as they see this as a way to support Hamas, as obviously when they took out these connections, they were trying to shut down any communication networks which Hamas might have, as Israel does enter Gaza in their invasion. Now, the UN said civil order was starting to break down, with Palestinians breaking into warehouses to seize wheat, flour and other staples, and this is largely as a result of the lack of food now seemingly within the areas of Gaza. A lot of it is being stockpiled by the Hamas militants. A lot of it is just not there because they don't have the the imports of the aid, or they just don't have the production due to the instability as well. Now, Hamas still holds 200 hostages after killing obviously the 1,400 Israeli civilians. And Israel has bombed Gaza for the last 3 weeks in response, obviously, causing, a lot of controversy around the world as a result of civilian collateral damage. Now, tensions within the Middle East are peaking, with Iranian President Ebrahim Raisi saying on social media platform X, formerly known as Twitter, of course, that Israel's crimes have crossed red lines, which may force everyone to take action. Now, this is something they've been talking about a lot recently, is the possibility of escalation. This is why it's such a key topic to stay on top of and talk about, because if escalation does occur, this will have massive impacts on not only the markets in driving gold to new highs, unforeseen highs, but also it'll have massive detrimental impacts on nations around the world, with the possibility of the US, Iran and other large geopolitical states being dragged into this conflict. We already know there's mass protests around the world, and especially within the Middle East, to support Gaza and the Hamas militants as they begin to defend themselves from the Israeli invasion into Gaza's territory. And so, the chances of a regional escalation are likely, with Hezbollah in the north, in Lebanon, just on that border, having plus 50,000 militants. These are well-trained, militants funded by Iran. Obviously, they have a strong paramilitary funding and support from Iran, and they're a strong Shiite group based in both the borders of the Golan Heights, so Syria, as well as on the north with Lebanon, and so the chance of them getting involved is very likely as well. We know the Houthis have also been sending missiles before over to Israel, with the US even having to shoot some down on their way to Israel. And we know there's been escalations with certain groups in Egypt, Jordan, Saudi Arabia, and as well in Dagestan now. As although that's quite far away in Russia, it is showing that these mass groups are looking to possibly support Hamas in some sort of action. Now, is much of the rocket fire has also been seen from Lebanon, with on Friday rocket fire reaching further into Israel than at any point recently, and Israeli authorities have also been criticized for blocking most humanitarian aid from entering Gaza. And this was a key talking point as well, especially earlier on, when many aid organizations and the UN, for example, were criticizing Israel for their stance against aid going into Gaza, with many of them arguing that this is only going to be stockpiled by the major political state actor within Gaza, that being Hamas, that being the group which massacred Israeli citizens and has a track record of stealing supplies that were intended for Gaza's residents and then just end up using that for themselves. And as we know, if Hamas is looking to embed themselves within Gaza City and defend against this invasion, it is quite likely that any medical supplies heading into the nation would be somehow attempted to be routed to Hamas militants, as obviously medical supplies would be needed. But that obviously is bad for the civilians of Gaza, as this just means that the civilians that need the help still aren't able to get the aid. So it's a tough one to kind of try and sort out. Now, US National Security Advisor Jake Sullivan said the US was pressing Israel to make sure to distinguish between Hamas and the Palestinian people. This has been a key talking point and issue with a lot of the Palestinian support and solidarity protests around the world. Also saying that there needs to be two states for two peoples. This has been an attempt for many, many years. Following the Declaration of Independence for Israel, it's never really seemed to be achieved, and once again this is being called for by the US cabinet. Now, the new speaker for the US House of Representatives, Mike Johnson, and this was the guy that we spoke about last week who had just won it in a surprise vote, is expected to pass a standalone Israel funding bill of $14.5 billion. And we were expecting this, but obviously it wasn't able to be passed until a House of Representatives speaker has been established. And now that it has, we have the possibility of legislation once again being passed within US Congress. But that's all to talk about for Israel. Definitely keep your eyes on that as it continues to escalate. But next to talk about, of course, is UK insurance brokers, which back the move to cut costs for leaseholders. Now, 5 UK insurance broking groups have signed up to a pledge to stop sharing insurance commissions, with landlords and to cap their own fees. Now, this comes in a move the government said would significantly reduce the cost for thousands of leaseholders. And it was only last week or so that we were talking about how Jeremy Hunt was really trying to introduce new policies to help UK homeowners, specifically those being younger homeowners or those looking to get on the housing market. And so this is quite possibly one of the policies which is looking to be introduced. Now, leaseholders in a block of flats pay towards insurance policies covering their buildings and their contents, but have no control over which insurers are selected or their intermediary costs paid to broker fees. Now, these are often shared with the landlord freeholder or managing agent, and Willis Towers Watson, Lockdown, Brown and Brown, Bridge and PIB have all agreed to stop this process of landlords basically taking commissions on those insurance policies and selling them on to their residents. Now, this move comes following the UK financial regulator said intermediary fees paid by leaseholders as part of their building's insurance, which reach as high as 62% of the premiums, to be disproportionate. So, ruling that these are unfair and over the cost policies which are being implemented and sold to residents of these apartments. Now, the government pledged in January to ban managing agents, landlords and freeholders from taking commissions on buildings insurance, and the measure is expected to be part of a leasehold reform bill to be unveiled in the King's Speech on November the 7th. So that's something to look out for in relation to the UK's housing market. It'll be interesting to see how that affects it, if at all. But that's all to talk about for that article. Next to talk about, though, is Mike Pence. Now, we did talk about Mike Pence and, the Republican primary, presidential campaign run that many individuals were running. However, Mike Pence was always kind of one of the more unlikely figures, of course, to come near being the Republican primary candidate, largely because of how he became distant from, the main political leader within the Republican Party, that being Donald Trump. And this came following, obviously, Biden won the 2020 election, and Mike Pence looked to certify the result, whereas Donald Trump and his allies and his followers looked to denounce it and not agree with it. And so this obviously caused a lot of hate for Mike Pence. And so it's unsurprising that we're now seeing this, as Mike Pence has dropped out of the race for the 2024 US presidential election. This comes as the former vice president struggled to mobilize support and boost flagging poll numbers. He said on Saturday, "I'm travelling across the country over the past 6 months. I came here to say that it's become very clear to me this is not my time." So, it does seem that he's, taken, the reality pill and realised, the Republican Party is not on his side at the moment, and likely won't be until the Trumpist age of the Republican Party is over, if ever. This could be the long-standing legacy of the party from now on, obviously. He said, now the former vice president failed to take off this year, only achieving 3.8% support in the Republican primary race. So obviously, this is very, very low compared to the 50% figures that we're seeing from Donald Trump, with Pence's campaign raising less than $5 million between July and September, putting him near the bottom list of contenders. And this, period of looking for financing, looking for funding for your campaign is generally considered the invisible primary, and it did seem that he lost that, so he failed to earn the cash that he needed for this campaign. And often we do see the winners of the invisible primary go on to win it as well. Now, the Republican primary still has Donald Trump far in the lead at more than 50% in the polls, with Ron DeSantis in second with 14%. And as well as that, Ron DeSantis actually has many fans which are more Trump, supporting as well. So if Ron DeSantis does, remain as a second contender, it is likely that Ron DeSantis does come over onto, the Trump train, joining him possibly as, the vice president, possibly. That said, we do have up-and-comers such as Vivek Ramaswamy, which obviously could also take that spot. So you have to think about, those votes for Ron DeSantis could also go to Trump, which is very likely. So, it could be plus 64% for Donald Trump actually in the polls. Now, Trump and Pence did split dramatically after the former vice president refused to acquiesce in Trump's demands that he block the certification of Joe Biden's 2020 Electoral College victory. And Trump earlier this year said Pence was delusional and had gone to the dark side. So once again, some more, very Trump rhetoric there, with Chris Christie, him being more moderate Republican within the primary, saying Pence deserved our thanks for putting his oath of office and the Constitution of the United States before his personal and political pressure. So really some significant speech there, but it is interesting to see how the Republican primary is beginning to shape up and which candidates will actually be going ahead to actually compete in the final stages to become the presidential campaign nominee. So definitely look out for that. But that's all to talk about on the articles. Next to talk about, though, of course, is the charts, where we have lots happening this week as we load that up. With firstly US indices continuing to decline, as we can see here. So if we have a look at the US 30, we did see that decline coming off since Tuesday, the 17th of October, and we've kind of been seeing that fall off. We saw a slight retracement, obviously nearing that 38.2% Fibonacci area when we knew there was a strong area of liquidity. It failed to actually, punch into that area or even break into this strong area of liquidity, falling off just shy of that and now continuing to fall to the downside. This could largely be to, the strong and robust data that we're seeing from the US economy. But what will be interesting to see is how the Fed's interest rate decision later this week, as well as their inflation rate data, which should come out this week for the US, should affect US indices, of course. So that's definitely something to note as we go into, as we go into this week. And this will be mainly driving US indices, the dollar and gold. So definitely keep your eyes open for that. But yeah, we've seen a decline in US 30 going into this week. But next to talk about, of course, is the dollar. Now, we have that significant data release coming out this week, as I've mentioned. And, following, I forgot what it was now. It was the robust US economic data last week. We did see that push on the dollar, which allowed it to break above this bearish trend line, but failed to break above this significant area of liquidity and resistance that we highlighted. And we did see that sell off from that point there, and a retracement from that level. Now it does seem that we're consolidating around that level. We did near that 38.2% Fibonacci area. Arguably we tapped into that just simply by nearing it, and as a result pushing into the liquidity on the surrounding area. So it'd be interesting to see now if it has gained that level of liquidity from that 38.2% Fibonacci area, whether now it'll be able to make a further push to these highs on the dollar. But as I said, the data coming out this week and the decisions being made by the Fed this week will have great effect on the dollar, of course. So definitely keep your eyes open for that. Next to talk about, though, is Euro USD. Now Euro USD broke below this area of liquidity that we had highlighted, and we were expecting a retest on that. It seems we have now retested that area and seen a slight sell-off from that area as well, from that 38.2% Fibonacci area. It'll be interesting to see now whether it can make a run to the downside and where it might make a run to. But once again, this will be heavily influenced by the interest rate decision later this week, as well as any inflation data. So those are the two things which are super important to look out for, obviously, as this will be pushing the euro, as well as that we also have the Eurozone inflation rate later this week. So obviously look out for that as well, as that will be heavily influencing the markets in relation to that. So that's all to talk about on Euro USD. But next to talk about, of course, is pound yen, which has punched into this area of liquidity once again. So we had spoken about this area of liquidity as quite a significant area due to the fact that it bounced. Price had pushed into this area and reacted in a bullish manner over and over and over again. If we just highlight it out here, we've got once here. If you include its formation here, we've got once here, second time there, third time there, fourth time there, fifth time there, 6th time there, 7th time there, and now arguably we're pushing in for the 8th time, with all prior times, acting in a very, supporting manner for price. The question is now whether it will continue to be used as bullish support, because now we're questioning whether it will, due to the fact that it does seem that we're on a bearish trend from here at the moment. As we can see here, price has pushed down from this higher area of liquidity, pushed down, tapped firstly into this area of liquidity that we're speaking about once again, tried to find bullish momentum to the upside, but reacted to that 50% Fibonacci area, retraced to the downside, and now we have the possibility of breaking below that. If we do, we should be expecting a retest on this area of liquidity though, so definitely keep your eyes open for that. But that's all to talk about on pound yen. Next to talk about, of course, is USD JPY, which has pushed to the downside now once again into this area of liquidity. We had spoken about how USD JPY had such a tough time pushing into this area of liquidity here, and had finally broken above it. It does seem that this was a false breakout, almost breaking above it momentarily before now falling back down below this area of liquidity. So it does seem that it's too tough for USD JPY to break above that. It has now fallen off that area and has returned into this area of liquidity here, also tapping on that 61.8% Fibonacci area. So it'd be interesting to see now whether it will gain that bullish momentum to the upside, or in fact this is a change in the trend now. But I think, quite possibly we could be expecting some more bullish momentum as we have now entered this area of liquidity and hit that 61.8% Fibonacci area. So definitely keep your eyes on that. Next to talk about is Bitcoin. Bitcoin obviously has spiked heavily recently following, increased Bitcoin ETF speculation. So more people are expecting that a Bitcoin ETF will be approved. This is called Bitcoin's price to skyrocket greatly, hitting that 3,500 mark, which is very, very significant, where it has seemed to have formed a significant area of resistance on the upside, and on the lower side as support, it has formed an area of support around the 33,500 area, and now is forming an almost bullish movement upwards, but it is staying within this range. So it'd be interesting to see where Bitcoin can go from there. Lastly, to talk about on the charts though is gold, which in response obviously to the escalations within Gaza, Israel's invasion of Gaza, we have seen massive bullish momentum on the upside for gold, breaking above those highs, and breaking above the $2,000 mark, which we had marked as a significant area of resistance for price, for gold. And now that it's broken above there, we have great potential to reach new highs, possibly punching to levels of 2020 or 2040 and 2050 especially. So definitely keep your eyes open, as we may be expecting a kind of retest of price before a further push higher. That said, when we have these massive fundamental news events, we do generally just see a massive push to the upside, and we will definitely be expecting price to reach that Fibonacci extension level of minus 27.2. So definitely keep your eyes on that. But that's all to talk about in the charts. Lastly to talk about, of course, though, is the economic calendar, where we have so much significant data coming out later this week that's definitely to note, of course. So firstly, we're going to have to get through it quick because there's just so much. Firstly, we've got German GDP growth rate figures, as well as inflation rate figures. So this will be heavily influencing the ECB's monetary policy. Obviously, as the German economy is the most important within the Eurozone, this is what the ECB primarily bases a lot of its policy on. So definitely listen out for that, as the inflation rate will be very key, along with the GDP growth rate. As well as that, we have Chinese manufacturing data, as well as the Bank of Japan's interest rate decision, along with French inflation rate and Italian inflation rate, along with the overall Eurozone inflation rate and GDP growth rate. So massive European news coming out this week and figures, which will be heavily driving movements on the euro, which is so important to listen out for, as all this data will be coming out and will be pushing markets in very interesting ways. As well as that, we have Eurozone inflation rate, as I said, and GDP growth rate. But we also have, on the US side, we have US consumer confidence, as well as Aussie unemployment data and employment data, of course, along with, US manufacturing data. And most importantly, we have the Fed's interest rate decision this week. We are expecting rates to stay the same. But that said, there is some speculation of raising rates later this year. So obviously, with the robust US economic data that we've been seeing, it is, there is the possibility there of higher interest rates. So definitely listen out for that. And the Fed's press conference following that decision will be very influential for how we expect another rate rise later this year. But as well as that, we have German unemployment data, along with the Bank of England's interest rate decision. So very key data there for Germany once again, but also for the UK. That'll be heavily driving the pound, of course. Once again, we're expecting rates to stay the same, but there is that chance there of a further rate rise as the UK is struggling massively with inflation. Now, we also have Canadian unemployment data, along with, most importantly, not most importantly, but very importantly as well, US non-farm payrolls on Friday this week, and that will be very significant, of course. Now, that's all from us at Wildwood Capital. I think we covered a lot, and yeah, have a great trading day, have a great trading week, and we'll see you on Tuesday with the next morning market briefing. See you later. Bye.